articles in CBS Sports, Sports Illustrated, and Sports Business Journal about what a tremendous asset a loss of value insurance policy is for a college athlete, but for that to happen, the insurance company has to pay. I'm Jonathan Yates with the Culture of Sports, and we're here today with Reed Smith and Richard Giller, who's a partner, who's going to tell us how he gets the insurance companies to pay on those policies. Mr. Giller, thank you for taking the time to be with us today.
Happy to help. Thanks for inviting me, Jonathan.
Well, so the question is, let's start off with the loss of value insurance policy. There's basically two components to it. What exactly are they?
So, permanent disability policy is what most athletes have. And then you can buy additional coverage, a rider endorsement, known as loss of value insurance. So for a college athlete, it will insure against a drop in value of your first professional contract because of an injury. For a professional athlete, it will insure against the drop in value of your next contract because of an injury. So an athlete who's about to turn pro decides, I need insurance because what happens if I blow out my knee? And so the permanent disability portion of the policy will insure him if he can never play football, basketball, or baseball, or hockey again. And the loss of value will insure the drop in the contract value, but the drop in the value must be caused by the injury.
So are these policies being taken out by more and more athletes?
The prevalence of it has increased dramatically over the last 4 or 5 years, partly because in October of 2014, the NCAA ruled that student athletes could borrow against their future earnings to help pay their premiums. And then after that, the NCAA also ruled that schools could use student assistance fund money that the NCAA gives to every school to buy the premiums for the athletes too.
And so how much has this increased overall?
At first it was a few policies. Now there's probably a couple hundred disability policies sold on an annual basis and 100 or so loss of value components every year for college athletes. Professional athletes is probably greater because it's becoming more well known.
And do you see them used for primarily just football or for every sport?
Football, basketball, and baseball are the three primary sports. Disability policies are prevalent in all the sports, including hockey and women's basketball. Soccer should probably start using them more. Soccer players, both MLS and Premier League and around the world. But in the United States, it's basically baseball, football, and basketball.
And what have you noticed most? Have the policies themselves evolved? I mean, the numbers have obviously increased. Have the policies become better, worse, more?
That's a good question. I think that the wording of the policies has become better depending on which broker you're using. So most of these policies are placed through Lloyd's. Most people probably think Lloyd's is an insurance company. It's not. It's a marketplace where risk companies want to sign on to a certain amount of risk, and so they syndicate, they get together. And so an insurance policy issued by Lloyd's of London will have multiple syndicates. Could have one syndicate, could have 20 syndicates, each of whom signs on to a percentage of the risk. But because you're not dealing with a single insurance company when you're placing most of these policies, you have to use two levels of brokers, a wholesale broker and a retail broker. So let's say a student athlete, let's use a professional athlete. A professional athlete's financial advisor says, I think you need a disability policy, and because you're going to be a free agent next year, you should look at loss of value because there's going to be a significant jump in your contract value. And we want to insure against the possibility of that dropping because you get hurt. So the financial advisor will reach out to a retail broker, and that retail broker will then reach out to a wholesale broker who has direct connections with Lloyd's. And so the wholesale broker is the one that has all the dealings with the insurance company, and the retail broker tends to have all the dealings with the player or his representative.
Now, we had a fantastic interview with John Schreiber from Reed Smith recently. He made a number of points that even as a lawyer, I did not realize. He said, number one, a lot of times you don't even get the policy when you pay for it. Can you tell us more about that?
Sure. There's a process called a conditional binder. So if you reach out to a retail broker who reaches out to a wholesale broker, that wholesale broker will give you an application process, and you start filling it out. And then they'll issue quotes on how much they think the premium is going to be for the policy, how much coverage, how much what the limits of liability are, and then the premiums based on those limits. And then they'll conditionally bind coverage based upon the quotes and some preliminary information. It's not until the application is filled out that they even submit it to an insurance company or to Lloyd's, and then the underwriting process begins. But during that process, there's still some coverage in place. And then the medical information is to be supplied to the insurance companies as well. And so until the medical information is reviewed and approved, you don't actually get a full copy of your policy. And even then, you might not get it for months after they've reviewed everything.
So let's talk about the real world application process. Professional athlete, he's going to have an agent. But according to the interview we had with Mr. Schreiber, he said, oh, it's not the sports agents where you get the business from, it's their wealth management advisors. Are the agents dropping the ball and not knowing what type of policies to have for their clients?
I think the agents are more focused on the contract issues and not as focused on financial planning, whereas financial advisors will be more apt to say, do you have the right amount of insurance policy coverage for your homeowner's policy? And so I think it's a division of labor, not so much anybody dropping the ball. I deal with agents directly as well.
So that's for the 1% who make it to the pros. What about the other 99% in college? How sophisticated can they possibly be to go through this application process responsibly?
Well, that's where the school's compliance officers come into play. Let's back up. The NCAA sort of has who should even think about loss of value coverage as a collegiate athlete, and it's first round draft picks in Major League Baseball and in basketball, men's and women's basketball. For football, any first, second, or third round pick, and the same with hockey, should think about both PTD, permanent total disability, and loss of value coverage. So you're right, it gets to be even a smaller portion. It's not just who can be a pro, but these are the top echelon athletes in all these universities.
Do you see the loss of value insurance policy becoming used more and more as a recruiting tool? I was reading one article that said some schools would divide it in three. The family would have to pay for three, the SAF fund would pay for three, they borrow the money for the other third to pay for the premium. So do you see it used more as a recruiting tool by the savvy colleges?
I think it can be used both as a recruiting tool to attract high school athletes, as well as a recruiting tool for keeping your current athletes in college for another year. So for example, if in the NFL you have to be 3 years out of high school before that you can be drafted by the NFL. So if you're a sophomore, redshirt sophomore, you could potentially go pro. But if you're a redshirt sophomore and you want to come back for your junior year, you might think, okay, I better think about an insurance policy, because what happens if I blow my knee out or I dislocate my shoulders as a quarterback, and I drop in value. So schools can say, you should stay an extra year, not only because it's good for you, better for your education, and better for you to mature both physically, mentally, and have more opportunities and experience. But it's a great way for the school to make additional money on those star athletes for an extra year. Okay.
So, the American system of higher education and the NCAA, I think they do a great job. But I think the recent Michigan State University case would kind of make me wonder, are they reading their insurance policies? I speak because Michigan State settled for $500 million, and they're not sure if their insurance covers it or not. And in addition, they're thinking they're going to have to float a bond for it. Are they savvy enough to come to Reed Smith beforehand and say, read over our policy, we want to make sure we're covered for everything? And if not, what more do we need?
Colleges and universities have a number of insurance policies that cover all sorts of things, including the possibility of negligence supervision of certain people in colleges and universities, like the gymnastics doctor, that was, I think, associated with Michigan State.
Yeah, Michigan State University.
They may well have coverage for that, because while the act of molestation is excluded under every insurance policy in the world, not only because it's public policy not to insure those types of acts, but it's also an intentional misconduct. The schools are usually on the hook because they failed to supervise it properly, or failed to investigate, or failed to follow up, and those types of negligent acts may likely be covered under an insurance policy.
We certainly have three major universities that are in the news about that, with Michigan State, University of Southern California, and Ohio State University. If you were their counsel, what would you advise them before this took place in terms of their insurance?
Well, my advice to every policyholder is tender immediately. As soon as you have an idea that a claim may be coming up, you tender to your insurance carrier and all your levels of insurance. So your primary carrier, your excess carriers, your umbrella carriers, anybody you think might possibly have coverage, you tender. Because
what does the act of tendering to an insurance company entail?
You can either send an email through whatever the claims process is listed in the insurance policy itself, or you write a letter to the insurance company and say, I have reason to believe that this claim might arise, or if a claim has already been submitted or a lawsuit's already been filed, you advise them of that as soon as it comes in the door. But as a prophylactic measure, you should have somebody reviewing your insurance policies the minute you have any inkling.
Without question. Does that take place?
Not as often as it should. And that's true whether it's a college or university or whether it's a Fortune 500 company. I think insurance sometimes is the last thing people think about, and it should be the very first thing people think about, especially in a possible litigated matter.
So in the real world, where a lot of college athletes are coming from single-parent households, who do they have to look over the insurance policy or even think about it?
That takes us back to the athletic compliance department at some of these schools. They can't hire a financial advisor or a wealth manager or an agent if they're a college athlete. That'll violate their amateurism status. And if they are unsophisticated, and I'm not sure in whatever level, socioeconomic level you're in, you have much experience with insurance policies. So they turn to their coach and say, hey, it looks like I might be a first-round draft pick, but I'm worried that if something happens to my knee, and my family will suffer because I won't be able to sign my contract, or I'll drop significantly in the draft and be out a significant amount of money. So then the coach will probably direct him to the athletic director, and he or she will probably direct him to the compliance office, and those people will try and help. And you mentioned a couple of mechanisms. I know of one school that says to the kid, you go out and get a loan against your future earnings from whatever credit facility that the school's associated with, or a broker might be associated with. And if you stay in school, you do well, there are no off-campus incidents, and you basically stay out of trouble, we'll reimburse you for the amount of the premium. So basically they'll pay off
That's
the loan.
legal.
That's legal. There may be some tax implications for the student athlete down the road if the school pays the premium, whether they do it up front or by that credit funding mechanism. But there are potential antitrust issues.
How do they come into play?
And this is the thing, most people aren't thinking about all the issues, the tax implications.
Your average high school athlete's not thinking about the antitrust implications.
I'm going to say most college athletes aren't either. There are some schools that will only work with a certain identified insurance broker to buy PTD and LOV insurance. So let's say that broker has a single credit facility he or she uses. And the school says, go ahead, use this broker and you take a loan against your future earnings. Well, what if that credit facility can't or won't issue him a loan on his future earnings to pay for the premium? The student athlete is precluded from going anywhere else because the school only allows him to go to this one broker. And if he can't secure the loan and then can't secure the policy and then gets injured, what are the ramifications? What are the repercussions?
So is there enough liquidity in the market that secondary trading has developed for these insurance policies?
I'm not sure about that, but there quite possibly is enough liquidity. If you Google loss of value, some articles say no one's ever been paid on one of them. Well, I know for a fact, having been involved in a great many of them, that a lot of them get paid. It's not an easy process. You don't get injured, lose money on your first or next contract tell the insurance company about it and they write you a check.
No.
But that's something that doesn't happen with most insurance claims, regardless of whether it's an athlete or not. And that's why having a lawyer involved oftentimes in the procurement process, where they can review endorsements, exclusionary language, or other terms of the policy. Or at the claim process, when you first submit the claim, so somebody reviews the policy to see what language is key. And certainly after that, when you get your, shockingly, a denial letter from an insurance company saying, we're not gonna pay your claim, you definitely need legal counsel then.
You know, for some of the wealthier schools, would it be in their best interest to sort of self-insure or set up their own sort of captive insurance claim company? Or for the NCAA, I know the NCAA will write some policies, I read. Would it be better for them to set up some sort of captive insurance company if it's so tough to litigate for these things?
I'm not sure about that. I think having multiple choices, whether it's Lloyd's or Houston Casualty Company or Swiss Reinsurance, the Tokyo Marine Company, having different carriers to go to may help the market for the student athlete and get better coverages. So I'm not sure if a captive carrier, again, you might have some issues with antitrust there. If you can only use one broker and only use one carrier, what if the student athlete could go to the market and find better terms, more coverage, and less exclusions? I think that would be more beneficial for the student athlete.
And how detailed do the loss of balance insurance brokers get? I mean, do they say, you know, if your son, you know, goes to a school where he's going to play a running back going between the tackles, you know, 3 times every series, you know, we're not going to insure him. But, you know, if he goes to this school where he's going to be, you know, playing at a slot back or something like that, we'll write the policy. Do they get that involved?
They should, but they don't necessarily get that involved. I had a case, and it's the only case I've actually had to litigate. All the others have just been private mediations with insurance companies. But I had a lawsuit where the insurance company sued Mitch Moreland. He's the first baseman for the Boston Red Sox. He was with the Texas Rangers at the time. And the broker in that instance, when they placed the policy, informed the insurance company, which was Swiss Reinsurance, or North American Capacity Insurance Company at that time. When they sought a quote on coverage, the broker said, I have an MLB player, free agent at the end of the year, looking at a $30 million 4-year deal. Well, the player was not a free agent. He was only salary arbitration eligible, and it was the first or second year of salary arbitration eligibility, and there was no way he was going to sign a multi-year deal. It's most likely going to sign a 1-year deal. I also had an instance where I had an insurance policy issued to a baseball player, and it talked about minicamp and getting injured during minicamp. Well, minicamps only exist in the NFL. It's spring training for baseball players. So the carriers don't necessarily know American sports as well as they should, and some of the brokers are trying to maximize their premiums. So the good news for the student athlete in 2014, when the NCAA ruled they could borrow against future earnings, was that more athletes bought coverage. The bad news is it also opened the door, once the Student Assistance Fund money could be used, it opened the door to brokers who might not be as honest and scrupulous as others to just try to get a bigger piece of this giant pie. I wrote an article about Naeem Wortman-White. He was
it was an excellent.
Yeah, he was a Penn State linebacker. He was projected to be a 4th, 5th, 6th round draft pick. He shouldn't even have had a loss of value insurance policy. The school and or Naeem Wortman-White shouldn't have paid for that. They should have had a bigger permanent total disability limit than anything to do with loss of value, because the difference between being drafted at the top of the 5th round and at the end of the 7th is only a couple $100,000. It's the 1st, 2nd, and 3rd rounds where the drop is dramatic.
What are some of the things that have just been glaring where you said, no, that didn't come from Reed Smith, that's for sure?
Well, I appreciate the compliment. I think part of it comes from Reed Smith has the largest insurance recovery practice group in the world. Most large firms represent insurance companies.
And you just specialize in loss of value claims and other ones like that, or is insurance recovery encompass more for you overall than just sports?
Me personally, or
Yes.
no, I would say loss of value and disability for athletes, probably 10-20% of my work.
Is that increasing?
A little bit, yeah. I mean, the more people become aware of who I am. I had a Major League Baseball pitcher whose mom is a lawyer and a mediator, and he had a loss of value claim, and she was handling it for him. And then at one point, it got sticky, and so he said, "Look, I love you, Mom, but you're not the man, and we need the man." So
you don't want to file a bar violation against your mother for impounding counsel. It's going to make for a very sticky Thanksgiving dinner.
That could be very uncomfortable, yes. And she's an excellent lawyer and a great mediator.
Were you able to fix it?
Yeah. Well, not fix it. I was able to take it to conclusion.
So when you look at for the baseball players, when you talk about the pitchers, they're the highest paid, obviously. And it just seems to be somebody having Tommy John surgery. How does that play into a loss of value insurance policy? What if they get a botched surgery?
Well, I'm not sure that pitchers are always the highest paid, because there's only 5 starting pitchers, or 4, or 2 or 3 that are really spectacular. They seem to land the big contracts.
Yes.
But I'm a big Dodger fan, and we just signed Manny Machado. Sorry, but he took him from the Orioles.
We haven't signed him yet. You rented him for 2 months.
Yeah, but I'll rent him, man, for as long as it takes. My hope is that they sign him long term, and that's a big contract. But that's an instance where he's going to be a free agent at the end of the year, whoever he's with.
Well, you think he'll make more than Kershaw?
I don't know. They answered that one.
Yeah.
Kershaw to me is the best pitcher in baseball, so I think he's worth whatever he gets paid.
So what type of loss of value insurance policies would someone like a Kershaw or a Manny Machado have?
Same thing, which is get as much coverage as possible, and if you have Tommy John surgery or you blow out your shoulder and tear a rotator cuff, the question there is going to be, are you disabled and unable to play ever again, or did your free agent contract value drop because of the injury? And so it was at $100 million to start, and you signed for 50. You can't possibly insure. No one's going to take a $50 million insurance policy out. No one's going to issue one. But how loss of value insurance works anyway is, let's say you think you have potential of being a $10 million player. The carrier will insure 60% of that. So they'll insure you for $12 million. Sorry, what's $6 million? I was thinking of a $20 million policy. So they insure you for $6 million. And so the difference between what you could have signed and what you actually signed, for insurance purposes, it's a much lower figure. So if you could have made $10 million, but you're now going to make $5 million, the difference is really only $1 million based on the threshold amount of what the underwriters figure is your maximum contract, and then they'll insure 60% of that.
So generally, what's the term?
A year.
Even for a professional player too?
Sure, because what you're really worried about, well, disability policies can last longer or just get renewed annually. Loss of value, it's only the times when you're going to jump and have a contract jump. Because otherwise, for example, Kershaw's contract is fully guaranteed. Now, the interesting issue is the teams take out policies on their fully guaranteed contracts. So they'll have a disability policy insuring 60% of what they're obligated to pay Kershaw if he were to get injured and not play after like a 90 or 120 day period. The insurance company would start paying 60% of the salary.
Do you see management using these as an effective tool? What I'm bringing up here is the NFL strike in the late 1980s. The Dallas Cowboys were the only team that crossed the picket line en masse. Just virtually all their starters were. When I was interviewing one of the Dallas Cowboys about that, I asked him, I said, why did so many of the Cowboys cross the picket line? Was it because of your great respect for Coach Landry? And he said, no, it was because of my contract, that my annuity for retirement would only take effect if I suited up and played every time the Cowboys took the field. Do you see management using disability insurance and loss of value insurance premiums as sort of a tool towards their end? Because if I'm an agent, I want my player playing. It doesn't do any good if he's on strike.
Well, a suggestion I would make to the unions would be that they could work it into the collective bargaining agreements on the next time they have one, where the teams would be responsible for having additional compensation to the player to pay for premiums, disability premiums. The team's not going to necessarily want to pay for the loss of value premium because the player would be free agent possibility and may sign with another team, so why would you want to pay for that? But the players in the union would want that to be part of it. I mean, these premiums tend to run $7,000 to $10,000 per million for disability and $4,000 to $5,000 per million for loss of value. So, you know, they can be $100,000 premium.
Is that tax deductible as a business expense
For the teams?
for the players? Or for whomever pays it?
Well, so this was where I would say, you know, I'm not a tax lawyer. I don't even play one on TV. So I really just
But
keep
Reed
it-
Smith has an excellent tax.
We have a great tax group. And you know, for disability policies, if you and I can have a disability policy, and if I were to become disabled and collect on my policy, if I paid the premiums myself, the benefits from that disability policy are tax-free, which is a huge savings. If my employer pays those policy premiums with pre-tax dollars, the IRS has a ruling that the disability payouts are taxable. One way or the other, they're gonna get their taxes.
Do state laws have an implication anywhere?
I don't think state tax laws would, federal tax laws would have.
What about state disability laws? I know a lot of professional athletes collect from California.
Well, they used to try and get workers' compensation benefits out of California, but California passed a law a few years ago saying you can't do that unless you have played in the state of California for a California team.
And so what about the other tax laws and workers' comp laws that say, you know, if you play here, you know, you're paying taxes based on that amount? How does that play into insurance policies? Are there certain arenas that, you know, if you're gonna play in a certain place, the premium's gonna be higher, that type thing?
I don't think so, but that brings up the Reggie Bush case.
Which school is the best for me to look for to try to model my compliance practice after? Who does a great job?
Well, a number of schools do great jobs with it. I think rather than saying this is how you should do it, one way to protect schools would be for the schools to, for example, hire a lawyer on behalf of the athlete. Because the athlete can't, but if you're using $50,000 or $100,000 in student assistance fund money to buy a policy for an athlete, wouldn't you want to spend $5,000 or $10,000 to
Sure.
hire a lawyer to look at the policies before the kid signs on the dotted line and negotiate on behalf of them? Because there are the issues that come up all the time in these cases that I've found is.
But how do you make the point to them, you wanna hire a real lawyer? You don't wanna hire, you know, a family member or, you know, the guy down the street who did your will or, you know, handles your homeowner insurance when you have a claim or something like that. That, you know, you need to hire a real lawyer. You are swimming with reinsurance companies. You are swimming, you know, with the insurance industry. You are swimming with sharks. This is not the local lawyer who's.
Well, I think you could use an analogy, you know, like if you're driving a high-end car and there's some computer issues, do you take it to a friend of yours who does IT work to see if you can figure out what's wrong?
The warranty wouldn't
Yeah.
be maintained if it was that.
Yeah, but would you go see a general practitioner if you needed an heart transplant? And that's the type of thing where even within lawyers, if you don't have a breadth of experience in these types of policies, you may not know. I mean, we were talking about attorney-client relationships before, and I was with a firm before, Reed Smith, where one of my partners was about to share all this information with the insurance company, and I said, you know, you don't have privilege. And he didn't know that because he doesn't practice in insurance law.
Yeah.
You know, if somebody were to ask me a copyright or trademark issue, or you ask me taxation issues, I'd say, look, you need to talk to the right person. Certainly not me. So, yeah, I mean, a compliance or schools would have to look for somebody who has significant experience in these types of claims.
So, you know, you've been doing this for a long time. You're always rated very highly. So what would you tell the schools to look for and the student athletes to look for to make sure that they have the best loss of value insurance policy possible?
I always tell any of my policyholder clients, you look at the exclusions to see what they're trying to exempt from coverage. And you also really need to look at like the definition of injury and whether it is a sole cause, whether there are other factors that might come into play. There are a number, it's a complicated process in terms of what you should be looking for. But for me, most of these cases come down to the insurance company claiming, you didn't tell me all of your injuries.
So you want to see how many times the insurance company's been sued too?
That's a possibility. The wholesale broker is somebody you should probably look into as well, because you have no real direct dealings with them.
And would you want the wholesale broker to just be dedicated solely to loss value insurance, or would that be better for you too? Or would he be protecting his interests, the insurance companies, more than the policyholder?
It's an interesting question in terms of who they represent. A wholesale broker, if they are what's called a cover holder and have authority to bind the insurance companies, they're really more the agent of the carrier than they are the agent of the player.
Not in Maryland.
Right.
They have from personal experience.
But those are the types of issues you have to think about. To me, it's all about disclosure.
What about jurisdiction? And can you pick the jurisdiction if you're from a different state and going to school in another state, and the carrier is located in a third state? Can you work it that way?
So talk about complicated. Conflict of law issues and insurance coverage disputes can be incredibly complicated, especially if you represent a business entity that's multinational or has offices across the US. You know, what's the choice of law? A lot of courts use the situs of the loss, so where the loss happened would be the choice of law.
Obviously, the Reggie Bush case.
Right. I would argue for the athlete, it's the last act of issuing the policy. Where did that take place? Where did you deliver it? So if you sent it to California, I would argue California law applies. More so than where you got hurt, because you could have gotten hurt anywhere. The policy itself is what we're suing under, so it's a contract. But there are complicated conflict of law issues. But let's go back a second to almost every case I've dealt with as the carrier has said, well, you know, we asked you to list your injuries and you listed 3, and you didn't list how severe they were. And you know, from a reasonable person perspective, you would say, I told you I had 6 shoulder subluxations during my high school, college careers. You should have investigated it. Is it your duty as the underwriter to determine if those create a higher level of risk, and maybe you should exclude my shoulder from coverage, for example? But they don't. The insurance companies, in every case I've dealt with, take the position that because you signed the application under penalty of perjury, or you know, you attest it to be true and correct, I don't have to do anything as the insurance company. I don't investigate squat. But once you get hurt, the first thing I do is I ask for every medical record since you were in middle school, and look with a fine-tooth comb to find that, you know, you twisted your knee when you were in 8th grade, and now you blew your knee out and you didn't tell us about it, so we're going to rescind the policy for misrepresentations on your application.
In terms
It's
of
absurd. So wait, let me.
I'm sorry.
I take the position that if I were representing the student athlete, I would say, you collect every medical record you've had since Pee Wee football. You put it together on a flash drive. It could be 3,000, 10,000 pages, however many pages, hundreds of pages. And when you submit the application, you say, see attached.
So my next question, I just interviewed Rick George from the University of Colorado and Joe Parker from Colorado State University. They're both fantastic ADs. They take great care of their athletes, and their facilities are spectacular. Can they get a lower premium by saying to the loss of value insurance company, you come here, you look at our facilities, you look at, you know, our student athletes can get massages daily. Our meal plans are fantastic. They're healthier when they leave than they even got here. Can they use that to get lower premiums?
I'm sure they could try. I don't think it'll have any impact.
So it's sort of the uniform premiums per sport across the country?
Pretty much. Depends on, because, you know, one of the things, you could get injured on a practice field.
Mm-hmm.
And your practice facilities may not be as spectacular as your stadium. You get injured playing at another team's field. So I'm not sure that plays its part. It'd be a good argument. I would make the argument.
Well, it seems to me it would be in the best interest of the college ADs to sort of get together to buy these policies and say, you know, you look at our facilities combined to the others, we should have cheaper policies for loss of value and disability than other schools. Collectivize their buying power.
The problem with that is, you know, the policyholder is the only one that has an interest in it. So the schools.
Well, if the school's paying a third through the student assistance fund or even higher, they certainly have an interest there.
Sure, they do.
And would be a huge recruiting tool too.
like I said, it's a double-edged sword of recruiting tool, because it can happen trying to land a kid out of high school, especially in situations like the one and done situation you were talking about with basketball. If you say, we'll pay for your insurance policy, because every one and done thinks they're going to be a first round NBA pick anyway.
So the amount of loss value insurance premiums has increased along with the policies. Do you see the premiums continuing to increase and the number of policies being continued to increase too?
I see the number of policies increasing. I'm not sure the premiums are going to go up.
And why is that? Generally, insurance premiums always go up, certainly for my health insurance.
Well, I think the rule of thumb we gave earlier between $4,000 to $5,000 per million for loss of value has been the norm, and now that there's student assistance fund money available and a lot more policies potentially being issued, you're going to see some capitalism come into play, and some of these carriers are going to try and get the lower premiums so they can get more of the dollars.
And realistically, how many carriers are there in this marketplace?
5.
Do you see it increasing if you look at these high premiums?
Um,
It would seem to me when you said earlier that they really don't understand American sports, if I'm an insurance company out there or a broker, boy, I see my opportunity right there. Just explaining to them more and more what they're missing. For example, Tampa Bay throws the arms out of all its pitchers. There's a good article in the Reese paper a couple weeks ago about the running back from Tennessee, transferred to Baylor, play wide receiver, because he studied it and saw that the average career for a running back in the NFL is 3.2 years. And for a wide receiver, it's 10 years. So he wants to switch positions. And do you see loss of value insurance companies adapting to that, possibly becoming more sophisticated?
I would hope so. I mean, the adaptation is key, right? That's
in the Darwinian world, is this certainly the world for insurance plays?
well, let's hope so. I mean, doing your homework is important, and so there was a recent lawsuit filed by a running back, Raleigh Williams, who, as a sophomore, suffered a vertebrae break, and then as a junior, they were thinking, but he had a great sophomore season. He took out an insurance policy, hopefully disclosed everything about all of his pre-existing injuries, and then as a junior, and he was highly touted, about to probably be a top first, second, or third round draft pick in the NFL, and he had another significant neck injury in spring practice of his third and final season.
Definitely his final season.
At Arkansas. Well, he actually retired, and so this goes back to that the policy not being issued. So the policy was taken out months before the spring training started. He gets hurt. He and his doctors make the decision that he can't ever play again, because if you do, you'd be paralyzed. He felt full body paralysis for a few seconds after the second injury, and like anybody would scare the daylights out of you. He retires. I can't play again. Seeks coverage under his permanent total disability policy. The day after he announces his retirement, the insurance company, through his wholesale broker, issued an endorsement saying there's no coverage for any spinal cord injuries. They excluded the very injury that happened a week before.
And so if I'm a college athletic director, how do I protect against something like that?
Well, you make sure you have policies and procedures in place that require that a policy, if I'm going to pay for a policy, I want a copy of the damn policy. And I certainly want a copy of it right up front. I don't want it 6, 7, 8 months later.
When you look at the college athletic directors, I've interviewed a lot. They care about their students, the athletes. They're dedicated. They want the best for them. What's the best advice you can leave them with from this interview so that their students, athletes have the best experience with their loss of value insurance carriers?
Considering the amount of dollars that we're talking about, and some of these kids, it's their whole future. And whether they're properly covered or not properly covered is an important factor. My advice would be you should talk to somebody who knows what they're talking about and who doesn't have a vested interest in the process. So just like I would tell you, I wouldn't necessarily trust your agents or brokers to tell you what is and isn't covered. You should have somebody who specializes in it look at it.
It's great advice indeed. Thank you for your time, Mr. Giller. It's been a pleasure. This is Jonathan Yates with the Culture of Sports. Thank you for joining us.